Hello and welcome. I'm Charles Aite. The Cedi is now the worst performing currency on the African continent with only 2 months into this year. This is because it has depreciated by about 7.6% to the dollar, overtaking the Zambian kwacha with 2 weeks ago, which was 2 weeks ago, and of course was remaining the worst performing currency on the continent. Charles Nixon-Yeboah looks at the League of African Currencies and has more in this report.
Both Ghana and Zambia have challenges in addressing their escalating debts as well as struggling with revenue mobilization and expenditure management. This conundrum is impacting negatively on the country's exchange rate, interest rate and inflation. Additionally, the recent downgrade of the country's ability to borrow is also a major worry as investors are still unsure about the outlook of the Ghanaian economy. This affirms some economists and analysts' assertion that all concerns regarding the electronic transaction levy must be addressed and passed immediately by Parliament. If not, the depreciating cedi will nullify the budget of most corporate institutions as well as reduce the disposable income of consumers. But there could be some hope going forward as the World Bank Group has approved a 5-year country partnership framework for Ghana from this year till 2025. This will see the injection of $4.5 billion into the economy in the next 5 years. Meanwhile, the Namibian dollar overtook the South African rand as the best performing currency in Africa so far, with an appreciation of 4.12% to the dollar. The South African rand is second, also with an appreciation of 3.68% to the dollar.
Quite disturbing there, but we'll engage an analyst on this. But before then, here are some infographics for your consumption. Of course, you could see the fact that in this particular infographics on your screen, Ghana's cedi ranks last, among the performing cedis in the African continent. We could see the very best performing cedi being the Angolan kwanza, which ranked first with a percentage of 12.26. The South African rand followed second. The Guinean franc was third. The Nigerian naira was also fourth in that regard. Now, this is where the story is. The Ghana cedi, tailing behind major currencies in Africa to rank 16th, among the worst, performing currencies in the sub-region, the continent actually, with the Gambian dalasi being the 9th. Well, let's dwell on this worrying development a bit because we're joined by the Executive Director of the Center for Economics and Inequality Studies, Dr. Benjamin Amwa. Doc, we're grateful that you could join us. What exactly is going wrong with the cedi?
Having me, I must say that the cedi's performance, particularly for the first 2 months, has been a bit of a shock for us because although we anticipated that 2022 would be a difficult year for the Ghana cedi, we never thought that it would come this quick. What is happening to the Ghana cedi is simply as a result of the nature of the current condition of the economy. If you have observed from last year, especially last quarter last year, the governor of the Bank of Ghana made some statement at, I think, an annual banking dinner somewhere last year. And if you read his report, and you analyze the report, the statement that he made in there shows that the economy really was having some difficulties. That information is public, and I will encourage your listeners and readers to have a look at that particular information and they see what is in there. So that is one. Two is also the fact that our commentators, especially those who matter as far as our public financial management is concerned, have also not been able to help us to push across confidence in the Ghana cedi. I'm saying this in particular reference to the statement that was made by the Minister of Finance in Koforidua concerning the need that we have to pass the e-levy. If not, the economy will be in shambles. He was being truthful, but then if you want to rally around confidence, you don't have to preach some level of hope to get investors to buy into the economy. Nonetheless, the fundamentals of the economy speaks volume of what we finally find ourselves in. Inflation is on the high, interest is on the high. And this clearly shows that investors will be quick to exit the market in the short term. And that is what is contributing also to the current state of the cedi.
But of course, government, naturally continue to, state the case of COVID-19, its impact on the economy, also citing issues regarding what is happening externally. But also, some analysts are also making the point that, the best performing currencies were also equally hit by the pandemic. Therefore, what particular solution in terms of practicality must government, absorb to make sure that this situation is remedied and this trend disrupted?
Okay, so we can look at it in two fronts. In the short term, there is a speculative attack on the currency. And so the only way to deal with the short term is to, again, fall on Bank of Ghana to do the injections, pump the dollar into the system, so that in the short term, the excessive pressure on the currency can be under control. Then to the medium to long term, we then look at what we can do in terms of some of the structural things that we need to do. If we are importing a lot, we need to look at that importation so we can reduce the pressure on our currency. And then going forward, we can also look at what we can do as a country to consume more of the local things that we produce. But in the immediate short term, it's about BOG supporting the forex market with some more dollars, so that once we deal with the short term, we can then look at what we can do in the medium and the long term.
Let's look at the Eurobonds, because one would want to wonder whether or not our failure to bring in proceeds from these bonds or not going onto the international market remains a stark concern to this situation.
Yeah, it is, but then again, at what rate are we going to contract these new bonds? Mind you, our fundamentals and our rating has been reviewed downwards by Fitch, Moody's, and S&P. So if you are going back to this market at this time, there will be funds available, but the funds available will cost you more. What do? Do you go in to contract these loans through the bonds at a higher rate, or you try to manage the situation the way it is? So these are some of the difficulties that I believe the managers of the economy are looking at, simply because our credit rating on the market now will not make it possible for us to contract these loans at the previous rate that we had them. It's going to be expensive. Expensive means that we have to pay more by way of interest, servicing. And that is what we are also trying to avoid currently. So we just have to hope and wait that the market will normalize a bit before we go onto the market to borrow.
Speaking about hope, you deal with the numbers. Looking at the crystal ball, where do you see the cedi's performance in the medium to long term ending this year, considering what has happened in the very first 2 months of this year?
Yeah, for now, we have crossed the 7 mark on the retail market. And if you look at the difference in the interbank rates and what the forex market is telling us, definitely we are going to end the year with the cedi at more than $7 cedis to $1 US. Again, between now and December is such a long time that if you're able to get the injections from BOG, if you're able to get some support locally in terms of cleaning our books as a country, from where we are sitting, we believe that the speculative attack on the currency will be reduced a bit. Even though the cedi will depreciate, it will not be as fast and as high as it has been in the past 2 months. We are not going to see a slow pace. But as for the 7 cedis to $1, we still believe that come the year end, the cedi will be trading at that to the US dollar.
Dr. Benjamin Amoah, grateful for your analysis. He's Executive Director of the Center for Economics and Inequality Studies.